Imagine settling into an airplane seat that costs more than a car. It sounds absurd, but on certain Singapore Airlines flights, it's reality. In the rarefied world of first-class suites and lie-flat business seats, a single seat can generate tens of thousands of dollars in revenue, sometimes more than the price of a brand-new car. This startling economics is at the heart of Singapore Airlines' success. The carrier has become a premium profit machine, leveraging luxury and service to achieve industry-leading profitability. How can one seat in the sky be so valuable? How did Singapore Airlines, SIA, turn 20% of its passengers into 80% of its profits? Today, we'll dive deep into SIA's strategy and see why. For this airline, the high flyers up front are worth their weight in gold. Singapore Airlines wasn't always a global luxury icon. The carrier's story began in 1972, splitting off from a regional airline into the national airline of the small city-state of Singapore. From early on, SIA set out to punch above its weight by offering superior service and comfort. The company introduced innovations like free drinks and personal entertainment screens long before they were industry standard. Its flight attendants, the iconic Singapore Girls, were meticulously trained to embody hospitality. Over decades, this focus on quality built SIA a reputation as one of the world's best airlines, winning loyal customers in both economy and premium cabins. But it wasn't just about winning awards. SIA's leadership recognized that excellence could be a business strategy. By the 1990s and 2000s, while many airlines raced to cut costs, Singapore Airlines doubled down on premium services. It added ever more luxurious first-class cabins, lie-flat business seats, and amenities like gourmet cuisine and top-shelf champagne. The aim was clear: attract high-paying travelers who would happily pay a premium for a better experience. This was a bold bet. After all, lavish perks also mean higher costs. Yet SIA managed to deliver luxury while remaining consistently profitable, even as many flag carriers around the world struggled. The result is that today, Singapore Airlines is not just a respected brand, it's one of the most profitable airlines on the planet. In 2023 to 2024, SIA enjoyed an operating profit margin around 15%, an almost unheard-of figure in the aviation world. For context, global airlines typically run on razor-thin margins in the low single digits. American Airlines, for example, scraped by with about a 1.5% operating margin in a recent year. Even other premium Asian carriers lag behind. Japan Airlines' margin is roughly 8.6%, barely half of SIA's. In an industry notorious for cyclical losses and bankruptcies, Singapore Airlines' ability to consistently earn healthy profits is almost anomalous. So how do they do it? The secret sauce is who sits in those plush seats at the front of the plane. Singapore Airlines' financial performance has turned heads because it defies the usual airline economics. The airline industry as a whole historically ekes out only approximately 3 to 5% net profit margins, some years even less. But SIA's operating margin north of 14% puts it in league with much leaner businesses. For comparison, Emirates, another luxury-oriented carrier, is one of the few matching SIA, with a margin around 14% as well. Most other full-service airlines are far behind. US giants like Delta and United hover near 5% margins, and many European and Asian peers struggle to reach even that. In fact, if not for a handful of outliers like SIA, Emirates, and some low-cost carriers, the global average margin would be close to zero in bad years. What explains SIA's outsized profitability? Part of the answer is cost discipline and smart management. Singapore Airlines runs a tight ship with efficient operations and a relatively young fleet. But the biggest factor is revenue quality, especially from premium passengers. SIA has essentially engineered its business model around a golden rule. A small fraction of high-paying customers contribute the majority of the profit. It's the classic 80-20 rule, or even 75/12 in this case, in action. According to industry data, business and first-class travelers make up only about 12% of airline passengers, but can account for as much as 75% of an airline's profits. In other words, a handful of people at the front of the plane are subsidizing everyone sitting behind them. Singapore Airlines has taken this principle and refined it into an art form. Crucially, SIA isn't alone in relying on premium cabins. Most full-service airlines depend on business travelers to stay in the black. But Singapore Airlines has maximized this dynamic more than most. It has invested heavily in making its premium products truly top-notch to attract willing high spenders, and it has configured its aircraft to allocate a lot of space to those revenue-rich seats. The airline's profitability, therefore, rises and falls on its ability to fill expensive seats with customers happy to pay. And fill them it does, often at eye-popping prices. On certain routes, a first-class suite ticket can cost around $20,000 one way, a fare that rivals the price of a car. Even business-class seats routinely sell for several thousands of dollars each, especially on long-haul flights. These premium fares carry fat margins, far above the slim profits, or losses, from an economy passenger ticket. By capturing more of these high-yield sales than competitors, SIA juices its overall margins dramatically. To really appreciate how one seat can be worth more than a car, let's break down the economics of an airplane cabin. In particular, the Airbus A380 Super Jumbo, a plane Singapore Airlines operates with a uniquely luxe configuration. Singapore Airlines was the launch customer for the Airbus A380, the world's largest passenger jet, and it outfitted this double-decker behemoth in a way that epitomizes the phrase premium profit machine. An A380 is a flying hotel with 2 full decks of cabin space, and SIA chose to dedicate a huge portion of that space to its highest-paying customers. The entire upper deck of SIA's A380 is occupied by premium cabins, specifically 6 ultra-luxurious first-class suites and around 78 business-class seats in a 1-2-1 layout. That's about 84 seats upstairs, dedicated to premium travelers. Meanwhile, the lower deck has 44 premium economy seats and about 343 economy seats in rows of 10. In total, SIA's A380 carries 471 passengers, so barely 18% of the seats are premium, 84 out of 471. Yet those seats consume far more than 18% of the aircraft's real estate. Why? Because each premium seat is much larger and more spaced out than an economy seat, by design. To visualize this, take a look at Singapore Airlines' A380 first-class suites cabin. There are only 6 suites spread across the front half of the upper deck, arranged in a 1-1 configuration with a wide aisle down the middle. Each suite is like a private mini hotel room in the sky, featuring a reclining swivel armchair, an actual bed that folds down, a sliding door for privacy, and even a wardrobe. In terms of square footage, each suite provides around 50 square feet of space per passenger. That is enormous by aircraft standards, roughly the area that 4 to 6 economy seats would occupy if packed tightly on the lower deck. In other words, SIA intentionally sacrifices the opportunity to cram in more economy seats so that a few first-class customers can have unmatched comfort. Why would any airline give one passenger the space of an entire row of economy? Because that one passenger is paying the equivalent of an entire plane load of economy fares. For example, imagine a long-haul flight from Singapore to London. An economy ticket might cost, say, $1,000, while a first-class suite on the same flight could cost approximately $10,000. That single suite fare can equal the revenue of 10 or more economy passengers. And since the direct operating cost of carrying one extra passenger, food, fuel for their body weight, etc., is relatively low, most of that $10,000 fare goes straight to the bottom line as profit. Even business-class seats, which on SIA's A380 are also quite spacious and lie flat, bring in perhaps 4 to 5 times the fare of economy. Yet a business seat might take up maybe 2 times the floor area of an economy seat. The math is clear. Revenue per square foot is much higher in premium cabins. One analysis found that premium economy and business class can generate significantly more revenue per square foot than standard economy. Airlines like SIA have figured out exactly how to optimize this. They allocate just enough extra space to premium seats to justify sky-high fares, but not so much that it wastes revenue potential. The result is that the upper deck of the A380, with only approximately 18% of the plane's seats, likely produces well over half of the flight's total revenue, and an even larger share of the profit. Even within premium classes, airlines fine-tune the balance. Singapore Airlines actually eliminated a few first-class seats in its newest A380 layout, dropping from 12 suites in older versions to just 6 super suites, now to make room for more business class seats. Why? Possibly because business class demand, especially from corporate travelers, is larger, and those seats, while cheaper than first class, are easier to fill. In fact, some industry observers note that first class can sometimes yield less revenue per square foot than business class because the suites are so space-intensive. Premium economy, a middle cabin between biz and coach, can be extremely efficient in revenue density, often generating more revenue per square foot than any other class. Singapore Airlines has introduced premium economy on many routes as well, capturing travelers who will pay a bit more for extra comfort. In short, SIA's fleet is configured like a flying revenue pyramid. A small number of very expensive seats at the top, a larger section of moderately expensive seats in the middle, and a big base of standard economy in the back. The base fills the plane and covers a lot of the fixed costs, but the profit is concentrated at the top. Let's quantify a single flight to see this in action. Consider SIA's flagship route from Singapore to London, part of the famed Kangaroo route connecting Australia, Asia, and Europe. On a typical Singapore-London A380 flight, there are 6 suites, approximately 78 business, 44 premium economy, and 343 economy seats. If all seats are sold, rough estimates might be first class fare approximately $10,000 each, business class approximately $5,000 each, premium economy $1,500, and economy $800, just ballpark figures for a long haul. Multiplying out, first class cabin brings in about $60,000, business class about $390,000, premium economy approximately $66,000, and economy around $274,000. Total revenue of the flight would be on the order of $790,000. Over half of that would be from the premium cabins. In this sketch, approximately 57% from biz plus first, despite those being only 84 of the 471 seats. In reality, SIA's yields can be even higher. The airline's Singapore-London route alone earned about $736 million in a single year, 2018 to 2019, ranking among the top revenue-generating routes in the world. That comes out to roughly $2 million per day in revenue for the route. Clearly, those daily non-stop flights to London are minting money, and it's largely thanks to bankers, executives, and well-heeled travellers up front, paying top dollar to save time and travel in comfort. One specific arena where Singapore Airlines' premium strategy shines is the Kangaroo route, the historic corridor between Australia and Europe, typically via Asia. For decades, airlines have vied for the lucrative business travellers and affluent tourists moving between cities like Sydney and Melbourne and London. SIA smartly positioned Singapore's Changi Airport as a prime transit hub for these passengers. Rather than flying direct, which until recently wasn't possible from Australia to Europe without a stop, travellers could connect in Singapore and enjoy SIA's high-end service for the long-haul segments. This has been immensely profitable. Let's use a case study: Singapore, London, Sydney. A traveller going from Sydney to London can choose airlines like Qantas, with a stop in Singapore or later in Darwin, or a Middle Eastern carrier via Dubai/Doha, or Singapore Airlines via Singapore. Many choose SIA for its reputation. SIA might carry the passenger from Sydney to Singapore, then connect them onward to London, effectively capturing the revenue of that passenger for 2 long flights. On such routes, the fares for first and business class are astronomical. A round-trip first class from Australia to London via SIA can easily exceed 20,000 Australian dollars, and business class often runs in the 8,000 to 12,000 Australian dollar range. These travellers are incredibly valuable. An internal industry rule of thumb is that premium passengers pay for the flight, and economy passengers are along for the ride. In other words, if an airline can sell, say, 30 business class seats on a flight, that might cover the majority of the flight's operating cost. The 300 economy seats then provide a bit of extra revenue and ensure market presence, but they're not where the profit lies. We see this on the Kangaroo route. Singapore Airlines operates multiple daily flights between Singapore and both Australia and London, and it often enjoys high occupancy in the premium cabins on these flights, thanks to corporate contracts and wealthy clientele. Those full cabins can push the route's revenue into the stratosphere. In 2019, Singapore-London was SIA's single highest earning route, at roughly $750 million USD annually, and much of that was concentrated in the front of the plane. What's really interesting is how premium passengers effectively subsidize everyone else. If you scored an $800 economy ticket on Singapore Airlines from Melbourne to Europe, you're getting a steal relative to what it costs SIA to fly you 20-plus hours halfway around the world. Frankly, $800 probably just covers your share of the fuel, crew, and maybe a couple meals. The airline might make only a few dollars of profit, if that, from a long-haul economy passenger once all costs are allocated. However, the business-class traveler paying $8,000 is extremely profitable. The cost to serve them, a bigger seat, fancier food, slightly more, baggage, maybe a lounge visit, is higher than economy, but nowhere near 10 times higher. Thus, airlines use the fat margins on premium tickets to offset the thin margins on economy tickets. On a flight like London-Singapore-Sydney, the dozens of business and first-class customers are effectively paying the bulk of the aircraft's trip cost. Their money enables the airline to then offer affordable economy fares to fill up the plane. Without the premium cabin revenue, an airline would have to charge way more for economy seats to break even, which might price out many travelers. As one observer quipped, "The people who pay for first class subsidize economy class. Without them, most of us would have to pay more to fly." This cross-subsidy is a win-win. Premium flyers get pampered, and budget-conscious flyers get a ride for cheap, all because the airline skillfully balances the mix. Singapore Airlines has mastered this equilibrium on routes like the Kangaroo route. It offers over-the-top luxury to justify premium fares, and by doing so, it can also carry price-sensitive vacationers in economy at competitive prices. This strategy keeps SIA's planes both full and profitable, a tricky combination in aviation. In essence, the 20% passengers for 80% profit principle is on full display, except sometimes it's more like 10% of passengers, the folks in suites and business, delivering the vast majority of the flight's earnings. That's the power of a business-class seat in SIA's world. It's not just a comfy chair, it's the financial engine of the flight. To command premium fares, offering a premium experience is a must. Singapore Airlines understands this deeply, which is why it spares no expense in its product quality. This might seem counterintuitive. How do sky-high costs for champagne and fancy seats lead to high profit? The answer is that luxury pays for itself when done right. By providing an exceptional experience, SIA attracts customers who are willing to pay extra, or persuade their companies to pay extra, for the privilege. The added revenue far outweighs the added cost. Let's look at how SIA does this. First, the hard product, industry lingo for the seat and cabin features. Singapore Airlines premium seats are consistently top of class. the airline has poured resources into designing cutting-edge seats. For example, its newest Airbus A350 and 777 business class seats cost hundreds of thousands of dollars each to manufacture, featuring hand-stitched leather by luxury furniture maker Poltrona Frau, and full flat beds with direct aisle access. In first class, the A380 suites are essentially mini hotel rooms with a revolving chair and separate bed. SIA even hired yacht designers to craft the interiors. These investments are massive. SIA recently announced a 1.1 billion Singapore dollars program to retrofit its Airbus A350 fleet with new cabin products focused on high-margin business class travelers. That's over $1 billion Singapore dollars spent on making seats plusher, entertainment screens bigger, and cabins more stylish. It sounds extravagant, but it's a calculated move. SIA knows that corporate clients and wealthy flyers will choose the airline with the better seat and ambience, even if it's pricier. By continually upping the ante on comfort, SIA protects its premium market share and pricing power. In fact, the airline's gross profit margin remains above 30%, partly because these premium seats allow for ticket prices that include a hefty profit cushion. Of course, it's not just the seat, it's the soft product, service and amenities too. Singapore Airlines is legendary for its onboard service. Its cabin crew are rigorously trained to be attentive and elegant. In first class, SIA offers gourmet dining with meals crafted by notable chefs. They serve Dom Perignon or Krug champagne before takeoff, deliver caviar on fine china, and present extensive wine lists. These indulgences can cost the airline a few $100s per passenger in first class. But remember, that passenger might be paying $10,000 for the ticket. Spending $300 on fancy food and drink to secure a $10,000 sale is a no-brainer. The same logic applies to amenities. SIA provides branded amenity kits, often by luxury houses like Lalique or Ferragamo, plush pajamas, and even double beds for couples in some first-class configurations. These touches create a wow factor that builds SIA's brand as a flying five-star hotel. Even SIA's business class cabin exudes luxury. The entire upper deck of the A380 is business class in a spacious 1-2-1 layout, as shown above, giving each passenger a wide seat that converts into a fully flat bed. The design is almost like a first class of years past. Large shells with high privacy, big screens, and ample legroom. This consistency in delivering a top-tier product has earned Singapore Airlines numerous awards and, more importantly, a loyal following among business travelers. Companies know that if their executives fly SIA, they'll arrive rested and pampered, and perhaps more ready to do business, so they're willing to pay a premium or use SIA for important trips. SIA's marketing emphasizes these premium offerings, for instance, showcasing the Book the Cook service, where business and first-class flyers can pre-order gourmet meals like lobster thermidor, or highlighting the exclusive lounges and even a private first-class check-in reception at Changi Airport. The strategy has a self-reinforcing element. By being known as the best, SIA attracts high-paying customers, whose revenue then allows SIA to invest even more in being the best. It's a virtuous cycle. Many airlines struggle to justify the cost of ultra-luxury offerings, but SIA has proven that if you cultivate the right market, the luxury more than pays for itself. And it's not just about tangible perks. SIA also excels operationally. It's consistently rated one of the safest and most reliable airlines, and it benefits from Changi Airport's efficiency as a hub. For a business traveler, a smooth, on-time journey with top-notch service is worth real money. It's worth noting that SIA's focus on premium doesn't mean it ignores other segments. The airline also operates Scoot, a low-cost subsidiary, to capture budget travelers in Asia without diluting the main brand. This dual-brand strategy means SIA can cater to both ends of the market, but its core moneymaker is still the premium cabin on long-haul routes. The airline has been careful to maintain that halo of luxury around the SIA mainline brand. Even economy class on Singapore Airlines is relatively well regarded. Free drinks, decent legroom, great entertainment, and of course the gracious service. This ensures that the entire plane experience is positive, which matters because a happy economy passenger today could be a business class passenger in the future. SIA is essentially cultivating lifetime loyalty through quality at every level, with the hope of graduating customers upwards over time. One could say Singapore Airlines has made excellence its business model. By being relentless about quality, from the softness of the pillows to the selection of wines, it justifies charging top-of-market prices. And those prices, in aggregate, yield profits that are the envy of the industry. It's telling that during the post-COVID travel rebound, SIA posted record profits, while some competitors were still clawing back to break even. Travelers were willing to splurge on quality, and SIA was perfectly positioned to capture that pent-up demand with its premium offerings. As an aviation analyst noted, SIA's premium revenue growth and strong financial results underscore how a refined premium strategy can fuel outsized performance. In simple terms, treat people like kings and queens, charge accordingly, and they will line up for the privilege.